Hello folks, welcome to NeuroBrew Trader channel and my new playlist. It's going to be focused on market liquidity and understanding the internal and external liquidity based on the Fibonacci retracement, not on fair value gaps, but you're gonna see the order block, and I'm preparing a specific playlist related to order blocks. But now mainly it will be focused on the Fibonacci retracement, and I will be showing you, like I will be focusing with you more on market liquidity, buy side and sell side liquidity on the daily time frame, or hours time frame, 1 hour time frame, 15 minutes time frame, like all the time frames. But we will be starting in the first video on the very high time frame, the weekly and the daily. All right, I'm now on the weekly time frame on British pound US dollar. I will be selecting a fractal, a weekly fractal based on 1 month, let's say from Monday 29 July till Monday 29 July till 29 August, 26 August. Okay. Or let's say 2 September. Let me take this one, this fractal from here, from this way. Here it is. Okay, from 10 June until 2 September, which is around 3 months. All right, so we have here a break of the swing high, and then a swing low formed before the break, and then a swing high formed, and the retrace as usual. You can imagine that your entry is going to be from here, and your stop loss is going to be below at this swing low. It is the reason we have here a failed order block. I will be explaining about the future, but mainly it is a swing high. And every swing high broken, you should expect in the future that the market will visit this place, and then there is a reversal is going to happen and change in state of delivery. And here is the reason, because I consider at this area I have internal liquidity, and at the swing high formed after the break of the previous swing high, I have here external liquidity. If I go to the daily time frame and show you what's happening exactly at this time, here it is. Here, here is the reason that why I told you I have external liquidity. I have this high here in the previous previously, and it got swiped up. And also here I have internal liquidity, external liquidity. I have equal highs. If I go to the 4 hours time frame, you're going to see it in a better way. Here it is. Look at these equal highs here. So my expectation here to get swept and fall back down. Fall back down into this liquidity here or above it a bit. And here is the reason. I will explain for you more. Here it might visit this place here, and at the same time it might not. And that's why when I put the Fibonacci retracement, I prefer to put it below the one. For example, this is the fib. For example, I say at 0.618, I tell you I prefer to put it below the one. Mainly, I put below the one because what I have here, I have what sell stops that are going to be swiped in the future. But what I can focus on at the same time, if I select this market fertile here, there is a change in conditions. And what is the change? What I have here, I have relative equal lows, and I have here relative equal lows. I have a swing low broken, I have retracement up, failed to push up into 0.618 level, and then went down, swiped, and then pushed back up. And after that break of the swing high that I showed you on the daily and that retracement, so I'm having a very high probability setup. So I'm going to search for another high probability setup that is happening on a low time frame, which is the 4 hours, for example, or the daily. This one on the weekly we selected. We went into the daily and then we went into the 4 hours. If you go back up into the daily time frame, you might not find like a clear entry at this area, but you can find it in this way. Here it is. The RAL violated into 0.786 and then pushed back up. If you go into the 4 hours, look what you will find. You will find mainly a good setup. And here it is. What I'm looking for, I might not find that kind of setups here. For example, this retracement down after the break of previous swing high, I'm going to look into most recent swing high. And mainly this August, of course, the market is hard to trade on. Mainly most traders take a break and don't trade at all. And some of them trade. It depends. But what I can tell you that now, because the market is volatile nowadays, we are in 2025, wars happening, financial crisis, and so on, many things. So here it is. We have this a break of swing high and then a retracement down. Of course, on the 1 hour, you are going to see a swipe of sell side liquidity. We're not going into the 1 hour time frame, and then pushed back up and continued pushing up. Now, in this case, don't you think you're able to take it? And of course, uh, you're going to see me focusing with you on the period, on the timing, because I really focus on this, and this is how, like, the price action or the algorithm serve price action or deliver price action in the right way. And you will see me explaining about when the daily high when the daily high forms and when the daily low forms at what time. And I'm going to be really specific with this, especially in this playlist, so you can move on with the next playlists. So hopefully you found this insightful with that, like, a small introduction for this playlist. And I'll see you in my next video. I wish you a good luck and good